Welcome back to Trendlines over Headlines, the show where we break down the markets with some of the best traders and analysts in the world. My name is Patrick Dunawilla. I'm the editor of the Chart Report, and I'll be your host. Our guest today is none other than Douglas Busch. Doug is a technical analyst and the founder of ChartSmarter. He's been a friend of mine for years, so I'm excited to catch up with him and hear his outlook. But before we talk to Doug, it's Friday. The markets are closed, so let's take a quick look at how this week played out. All right, so it was another choppy week, but overall a pretty mixed bag in terms of index performance. Small caps led the way with the Russell 2000 gaining nearly 1.5%. The Nasdaq also managed to close slightly higher by about 0.5%. The Dow closed more or less flat for the third consecutive week, so it's really pausing here. Now, the S&P 500 inched lower by about 0.33%, so nothing too dramatic, but that 4,100 level is proving to be resistance. We've been chopping around it all month. We ended the week slightly below it, so the bulls really need to reclaim that level next week. Keep an eye on that 4,100 level. If we can't reclaim it, then we could be in for a deeper pullback. Now, let's take a quick look at the sectors. Consumer discretionary led, gaining more than 1.5%. Energy was the clear laggard, dropping more than 6%. Anyway, without further ado, let's welcome Doug onto the show. All right, Doug, welcome to the show and thank you for joining us.
Pat, long overdue. Thanks for having me on. I'm honored.
Yeah, it's absolutely long overdue. You and I used to grab lunch every month or two. We'd go to Dos Toros back when I lived in New York City. And for those of you who don't know, it's basically like Chipotle, right?
Yeah, I think it's better than Chipotle. I mean, I'm actually looking at the Chipotle chart now, breaking down. But I'd love for Dos Toros to come public. But yeah, no, the food's much better there, in my opinion.
Well, listen, next time I'm there, we'll have to do it again. But we're basically doing the same thing. I mean, we'd sit there and just rap about the markets, and here we are doing the same thing, but maybe a little less chips and guac this time, right?
Not too spicy.
Not too spicy. All right. Well, so let's dive right into the market stuff. We're recording this on Thursday, February 16th, and it's been a choppy week, but we're off to a strong start still in 2023. And it's been a big change of character from last year. Of course, last year was one of the worst years in the past, the worst year in more than a decade, especially for tech, right? But you're seeing a big rebound in tech. Specifically, the Nasdaq is leading the major indexes. So let's start off with a big picture view of the Nasdaq. You brought this monthly chart of the Nasdaq. What are you seeing there? What are some of the levels you're watching?
Well, yeah, you could see the monthly chart there, and of course, this is the one time frame that's a bit concerning to me. As we get the primary trend, Pat, from this monthly chart, and the bulls still have something to prove. But like you said, the Nasdaq got up to a great start this year, up almost 11% in January. I believe that was its best January in 20 years. And you can see here on the chart that, the candles really played a key role there. The decent developments first was that bullish hammer candle last November. You could see it in that box there where it actually closed back above that 50-day monthly moving average. And notice the last 4 months also, I know we'll probably touch on it later, but they all came within close vicinity to that very round 10,000 number. And the bears really couldn't find any follow through there. So look, the candles called the top. It's hard to see that gravestone doji at the 16,000 number, but it pushed the index down almost 6,000 candles. The only caveat I see here is if you could see that monthly 50-day, it's kind of really hanging around there. The last 3 times the Nasdaq really saw itself power higher. It touched that line in 2016, late 2018. And again in 2020, and just really ricocheted higher. So just hanging out here.
And just to be clear, that's the 50-month moving average, right?
Correct.
Okay. Wow.
Yeah. And
so
yeah,
it hasn't touched that since 2016, you're saying, and it just did, right?
Well, no, 2016 almost did. 2018 and 2020 came very, very close. But the point I'm making is the fact that it's holding around here. I'd really like to see it distance itself a little bit. It's pausing here. It could be catching its breath, but I'm seeing some encouraging signs.
Yeah, so kind of like bigger picture, we're not out of that like whipsaw caution area yet, right?
Not yet, not yet. But I think the bottoming process is underway. We'll see that with the next couple of charts. But look, I think the complexion's getting brighter with every week so far. We know a good January is historically good for the rest of the year. So let's see how this plays out. But so far, so good.
Yeah, well, let's take a little more tactical look at it and look at it on a weekly or daily time frame. Are you seeing anything there that, in the shorter term is kind of encouraging or concerning?
Well, this one to me is a bit more encouraging on this time frame. You can see those consecutive doji candles on the bottom. They're in that little rectangle there. The last week of 2022, the first week of 2023. And remember, the doji's on that monthly chart called the top. Is this calling the bottom here? It looks that way so far. Remember, these doji candles are pretty adept at signaling a potential change in the prevailing direction. When you see one, that's pretty good. You see them back to back here. It really strengthens the bullish case. Look, the daily one here, this carry is much more important than any daily, the weekly time frame. What happened after that second weekly doji candle? The very next week, Nasdaq rose 5%. The week after that, rose another 4%. 2 weeks after that, rose another 3%. This week backing off a little bit today. But all those weeks I just mentioned that followed that second doji, they all closed at the top of the range and volume was expanding. So, I think that's pretty encouraging behavior.
Yeah, I mean, you saw like 5 consecutive green weeks in a row, just right off the bat after those two doji candles there. But you have
You
the
actually posted that on your chart report. I appreciate that, buddy.
Oh, of course, of course. And you have the relative strength chart in the lower pane there. Of course, Nasdaq relative to the S&P 500. And Nasdaq underperformed pretty badly last year. Do you think it has the chance of continuing this the nascent outperformance that it's had so far?
Yeah, well, you can see on that ratio chart on the bottom there that basically the whole year of 22. I mean, unless you were living under a rock, tech was pretty bad.
Yeah.
Underperformed all year, but you can see there it's kind of popping its head above. I mean, you hear these growth versus value things. I mean, I haven't heard that in a long time, but this, like you said, this nascent little beginning here, it could be the start of something. Look, the Nasdaq lost, probably about 30% last year, I believe it was, and I think it really hasn't lost back-to-back years, with the exception of the 2000 to 2002, dating back to like 1975. So I think that it's unlikely we're going to have another down year. How obviously no one knows how far it's going to go, but there's those weekly doji candles to me really solidified that bottoming process. And of course, like I said, it happened near that 10,000 number, strengthens the bull case.
Yeah, and one thing I really like about your process is that you do incorporate that round number theory into it. And I think there really is something there. At first it might just sound cute, oh, you have a round number, why place much emphasis on it? But, when you think about how people place orders, they usually do so, or not even just place orders, how they think about managing risk or entering new positions. It's often done on round numbers, right? That's just kind of how we are.
No, no, look, I'm a big proponent of it. I use it in my work, and it's self-explanatory. Stocks will pause, they'll find support at those round numbers. I found in my career some round numbers are more important than others. Obviously, the very round par number is a big one. If we want to give a couple of recent examples there, the dollar bounced off 100 basically. It's gone up about $4 or so. What did Tesla do before?
Yeah, I was gonna say we actually used your Tesla chart. I remember it's probably back in 2020 or something.
Yep.
But I remember you pointed out that it was breaking that nice round 400 number, which of course the chart's a little different now because we've had a split. So I
Yeah.
think that level may be around 25. But
Right.
it had that clear resistance level right near that psychological number, and that was just an epic rally out of that.
Crazy, crazy. But yeah, I mean, I believe it was on the 6th of January, it recorded that bullish engulfing candle and just, went on to double. What else? Baba, it's right near 100 now. That's kind of basing. If you want to, another example, if you want to look at the 200 number, IWM basically reversed a couple shooting stars there recently. Meta, after that nice blowout earnings, another one, shooting star candles right at 200. That's coming into its 21-day moving average. But yeah, I mean, I really like the round numbers. 20 is another good one for me. Stocks trying to, brush off that teenager status. One possibility there might be Rivian. We're talking about Tesla, but in that electric car group, Rivian, if it could stay above 20 here, possibly that's a good thing. And Cisco, 50 is another round number that I've found has significance. That busted above 50 today. I think there's a good chance that that number now becomes support. It was resistance twice in December. And look, Boring Campbell's, I know we were talking about technology, but Boring Campbell's 50, if you look at the monthly on Campbell's, the 50 number was a bull flag back to 2020, and it's retesting it now. So
Yeah, I
yeah,
mean, just
I like the round numbers.
numerous examples and definitely something for people to keep in mind. But we can't talk about tech without talking about the semiconductors. Of course, it's such an important industry group within technology, and not just for technology, but also the broader market. It kind of tends to lead the broader market higher or lower. So, what do you think on semiconductors? Do you think they have more upside here?
Pat, and you can see the distance between the purple and gold line is the semis. That black line is software. And look, the SMH, coming in today was up about 22%, basically doubling what software has done on a year-to-date basis so far. Could there be some mean reversion? We'll see. But, I think both of us know once trends are established, they tend to persist rather than they are to reverse. So I'm looking for semis to continue to lead. And a big reason why you see this chart here, the outperformance, and it gave me clues to potential leadership for semiconductors. There were 2 weeks that really stood out to me. The first week in November of 2022, the SMH fell less than 1%, and believe it or not, the software index IGV fell more than 10%. So that was a very interesting divergence. And then
Wow.
again, the first week this year, the SMH rose more than 4%, and software dropped 1%. So yeah, those are meaningful divergences there for me, and I think semis are going to continue to lead the way.
Yeah, I mean, you look at a chart of SMH and it's got that 10-month base. We're testing that neckline right now. Some would call it an inverted head and shoulders, but the point is it's kind of an accumulation pattern, and that's kind of what you want to see for a move higher. And like I just said earlier, you can't have a party without the chips is kind of how I was taught, and it's kind of bull market confirmation. So another one to kind of add to the bullish evidence there for the broader market. Now, are there any particular individual semiconductor stocks that you like?
Well, one that's really caught my eye is this Skyworks. Yeah, you can see it there. It's really the last 6, 7, 8 days is really nice tight ranges after a nice earnings reaction. You can see the action's pretty taut. I like to see very tight action. I don't want to see too much, volatility. The price action's moving up. You have that bullish golden cross there. I can remember when this one was a dog with Cuervo. I could have even put it in the same sentence. I can't say Intel, but I remember Skyworks and Cuervo were two of the names that just weren't doing anything. It's had back-to-back nice earning reactions now after, believe it or not, the prior 6 were all down pretty bad. So maybe it's turning the corner. Maybe it's turning a new chapter. I like it here. I want it to get above that bull flag. I like to incorporate that ratio charts on the bottom of my charts, and you can see there it's really caught up, and it could break out of this saucer-like pattern against the SMH there.
Yeah, nice little bull flag there. And I also like for a swing trade that earnings are out of the way, right? You kind of already got that big question mark out of the way.
Oh yeah, yeah. No, that binary event, you really can never know how a price is going to react. I mean, it could be a good number, and you get a bad reaction. So, yeah, that's out of the way. And the fact that it's not giving a lot back here, Pat, I think that's pretty impressive.
Yeah, absolutely. So another interesting area within technology has been software stocks. And of course, you look at something like IGV, kind of got cut in half last year, practically. I mean, I think it was down like 45% at the lows. And it's seen a decent rebound so far, this year and off the lows. I think it's up about 20%, but that's only about a quarter of its decline. Do you think the lows are in for software, or do you think it kind of has more digestion, more basing to do?
I think it's still a question mark, to be honest, Pat. Look, the semis, I don't watch a lot of TV, but if you're going to make an Academy Awards analogy or whatnot, the SMH is obviously the lead actor. We need software to have a best supporting role, right? You can kind of see here, I made the point here. Well, look, let's first of all give the group a little bit of slack. It's now comfortably back above that 50 and 200-day moving average. But right now, I think it's the time to really do nothing. You can paint your bias either way. If you're a bull, I mean, look, we were just talking about round number theory. Look at that bearish evening star. You see that 300 number, that shooting star there, right at 300.
Yeah.
And give it credit for moving, for not really following through lower. You can see there. So, the bears can really say, look, this is just trading into the bearish evening star pattern. The bulls can say, look, above 300, we have a nice cup with handle. You can get a nice continuation pattern higher. So I think, to me, I'd say, look, you can wait. I mean, let the bulls and bears fight it out. Of course, if you're trading this, I mean, this week we had a lot of earning reactions. Trade Desk, beautiful one. I think that was up by a third on Tuesday. Gave some back today, obviously, with the pullback. But for most of the day, it was up pretty nicely. Toast, no pun intended, got toasted today. I don't know if you saw that one, but where did that close? 2 pennies above the very round 20 number. So round number theory coming in again there. DOCN was a former leader that might, that held up well today. It's peaked below its 200-day. If it can get above there, obviously that would be good. Datadog seems allergic to 90. I mean, yesterday to the penny, it reversed off 90 and did so again today after its earnings. Twilio gapped up nice. Palantir, remember that name? SPACs, remember that? Remember that 4-letter word?
Oh yeah. You don't hear it too much anymore, but
no.
maybe
So,
we'll start.
well, or maybe it's good that the excess has been wrung out.
Yeah, I gotta say, one of the more bullish things for this software chart is if you zoom out on like a weekly, long-term scale of IGV, it fell off its uptrend line that's been in place since the 2009 lows, basically. It fell off it real quick last year, but then it reclaimed it. So I think that, as long as we can kind of stay back on that uptrend, I think, that's definitely constructive for the group. But are there any individual stocks? You mentioned a few. Is there one particular software stock that really has your eye?
Workday. I don't know if you have the chart of Workday up there, but yeah, for me, the best stocks, they'll first of all, they're going to act well post breakout. The best breakouts tend to work right away. If you have a breakout and it stalls, the chart's probably trying to tell you something. But this one, nice action after that double bottom breakout just below 174 toward the end of January. What's it doing now? Looks like it's bull flagging here for a possible add-on there. I really like the way this chart's moving. You can see that 160 area Last September, October, and November was problematic. Then you had that gap up on earnings. And then what happened to that 160 number? It became support in December and early January, and never gave up that 50-day. I really like that. And again, if you look at it below on that ratio chart, Pat, you could see a nice move in December, last December, and then after a nice lengthy consolidation for about 3 months prior. Now it's working on that cut base, so it's telling you that it's keeping pace with software, and it wants to be a leader again.
Yeah, and kind of similar to that Skyworks chart that we just looked at, it's got that bull flag kind of look to it, that tightening range right after a leg higher. So, I think you got to err on the bullish side there.
Yeah.
But
yeah.
I want to move on to another interesting topic that you brought with us today, and that's mid caps. For whatever reason, large caps and small caps tend to get all the attention. Mid caps kind of get lost in the weeds, but they're looking pretty solid here, right?
Yeah, I really like this again. You'll see that they basically were trading in a very tight correlation for a long time, and they still are. But you can see the mid caps right about late November. There, you could see it circled. That purple line started outperforming, and it kind of was like a leading indicator. And it hasn't really given it up since.
And that black line is small caps, right?
Yeah, that's the IWM. If we were to look at a chart of the MDY, that reversed precisely at 500. But yeah, and what we were talking about off the air is how we were really impressed with how it never really came back to touch that 470 level. I mean, a lot of these indexes, the major indexes, all had nice bullish ascending triangle breakouts. When you had the S&P was at 4,100, came back to test it, right? What else do we have? We have the IWM at about 188, came back and retested it, which is fine. I mean, breakouts, tend to be retested to really see their validity. But this one never came back and retested it. So for it to keep that altitude like we were talking about, I thought that was eye-opening. I think it's something to really keep an eye out on.
Yeah, I mean, you pointed out in your note this weekend that it's actually the closest to its former highs out of any of the other major indexes, closer than small caps or large caps. And I think there's that, I mean, basically less damage to repair for mid caps, right?
Yeah, that's what it's telling you here. Look, even inside that ascending triangle, you had that little inverse head and shoulders. So, when you see a couple of different patterns within the same pattern, it's usually a little more success prone. So, I think this is one to watch here. I see this one going back to highs, in the next month or two.
Yeah, are there any particular stocks you like in there? Because I got to tell you, I was flipping through the mid cap MDY ETF, and I saw quite a few bullish setups there. I mean, here we have Lattice, however you want to say it. But this one kind of fits with your other theme too, which is semiconductors. And you can see it's kind of holding that breakout above 85 and, nice long base there that's formed over the past year. So, if you go through some of those mid-cap names, you'll find some decent setups. Are there any that kind of have your eye right now?
Well, since we're talking about tech, some old tech names have performed pretty well this year. Rambus to me looks okay.
Oh, wow. I haven't heard that one in a while.
Yeah, RMBS, I'm not sure exactly if it's reinformed itself or it's kind of changed what it used to do. But the chart is telling me that this one's higher. It's actually bull flagging as well. A lot of these names that are bull flagging, you have to give them props at 52-week highs. Just it barely dropped today either. So decent relative strength on a soft tape. It did report earnings, so earnings are out of the way. It was down pretty good. I believe it was last week sometime, pre-market, found the floor right at 40, bounced off that level, and very, very tight ranges the last few days. So Rambus, yeah, blast from the past, Pat.
Very nice, very nice. Well, Doug, I think we got to wrap it up. But before we do, where can our viewers find more of your work if they're interested?
My site is called ChartSmarter, www.chartsmarter.com. I write a daily note every day. I'm a generalist, but I've been doing pure play sectors every day now. I'll give you, a general synopsis of what's going on in the sector. Then I usually have 3 or 4 individual ideas, could be long or short, depending on what the charts are looking like. And I've been doing that for a long time. So yeah, please check me out at chartsmarter.com.
Yeah, I mean, I love that name, ChartSmarter. I think that's a brilliant name. But Doug, thank you so much again for coming on, and Dos Toros is definitely on me next time.
Can't wait.
All right, have a good weekend. Thank you guys for watching. If you enjoyed the show, be sure to click like and subscribe, and we'll see you again next week. Thanks.